Hello, everyone, and welcome to another episode of eToro's Invest with the Best. I am Shani Blackman, Client Relationship Manager. Thank you for joining us today. We have an exciting guest with us, Amit Kupfer, also known as Amit Kupfer. Amit is a value investor who gained over 8,000 copiers just in the past year, from cadet to an elite pro. Amit, we are here to ask you everything. But just before we start, please remember to subscribe or like us on our social channel. Thank you very much. So, hi Amit, welcome to our webinar.
Hi Shani, thank you very much. Hi everybody. I'm very excited, nervous a little bit. Let's do it.
So it's normal. I'm happy to nervous. It's gonna be fun. Let's make it fun. Okay. Yeah. So let's start with you telling us a little bit about yourself, maybe your financial background. How did you, got into investment and the capital market? What drew you into that, basically?
Right. So it started about 12 years ago. About my first share. I was 21, 22 years old. And actually it started bad. It started really bad. I didn't know what I'm doing. I was just buying based on some rumors, and it's gone not so good. What's happened next is that I find out that there are some investors that are doing really well. I mean, obviously Warren Buffett, and then after this Peter Lynch, Bruce Greenwald, Joe Greenwald, and many others. And I started to study what they are doing. I'm not inventing anything from scratch, but just really reading a lot about what they're doing, the strategies, how they think about investments. And around 2014, I was more seasonal investor already, but then I also started a business, which really taught me how to look on money and how to behave with money and how to allocate money, basically. And this has really helped me as an investor as well. This opportunity that I had to start a business and to manage a business and to see the financial struggles, and then it's learning, always learning.
Learning process, never ending.
Never ending. Great, I like it.
Yeah, we love it. It's cool. We should always learn. We should always look forward to understand more and learn more. And for that, I would love if you can explain to us, what is your investment approach strategy? Like if you can even guide us through how do you decide whether, to open a position, close a position, why to open this specific, position? Do you conduct any research, things like that?
Yeah, so for me, it starts really with running a screener with some of the...
Screener?
Yeah, a screener, which is basically you have tens of thousands of different companies out. In the old days, you had to go to a manual book and just search each of those companies, looking on the balance sheet, income statement. But today you can run a screener with some variants and then refine the companies that you see, and from there keep digging into the financials, into the sector, and basically I'm looking for companies that are either leading in their sector and also, probably I prefer them to be even a monopoly or duopoly. Businesses that I can see the future and I can understand that the future is bright for them. And really I'm more towards the concentrated investor. So I'm not investing in many companies. I'm investing in few that I really understand. But then meaning even that I'm a concentrated investor doesn't mean that I'm invested only in the United States or only in the UK or whatever. It's for example, if we are taking oil companies, so it can be in South America, but it can be also in the States. And if it's commodities, now I'm focused on commodities. So it's going to be in different countries and different sectors. So, but not many companies, because at the end, I like to invest in things that I understand, where I see good value for the companies. For the long run, I'm not looking for like the next quarter or next half a year or next year. Sometimes it's meaningless. You need to look for the long run.
Got it. So basically value investor, which means taking undervalued company mostly and believing that these companies will
perform well in the future.
Yeah.
Hopefully. You won't sometimes, but it's
In
happened.
the long run.
In the long run, it's fine. Hopefully.
Yeah, but this situation you performed very well so far, so it's great. So obviously that I would love to really, really understand. So I know that most of your portfolio is commodities. Soon I'm going to ask you about that because it's very interesting. But do you have any insights, let's say, on specific sectors or like companies that you find really interesting that you think that they will perform, they will be significant in the next 5 years? Obviously, not as an investment advice. This is not an investment advice. I have to say it over and over again. I said the disclaimer at the beginning, but I just want to repeat it to your guys. This is not an investment advice. But Amit, I would love to hear that.
Yeah, so obviously I'm focused more now towards the commodities. I see a lot of value in this sector. Um, I think the value is there, and I think we, as the world is progressing, and we will need more. For example, we need more steel to, just to build more things, and we cannot recycle our way to the future. We cannot basically. There are two ways to make steel. For example, one is you put coal, which is one of the assets that I'm invested in, and you put it in hot temperature, and it's part of the way of making iron. The other way is to cycle, but then you need to demolish, let's say, bridges and stuff like this. So I'm looking at the next few years, and it's not an advice, obviously, but I see a lot of value in the commodity sector, also in the financial sector. Especially the companies that run lean operation, which basically don't spend a lot of money on the operation, on OPEX, and they don't have high CAPEX, come to my mind. And those type of companies where you can see the future and they are growing relatively good. Let's say Petrobras is growing fast. They're going to be like I believe the fifth largest Brazil, basically, but the fifth largest producer of oil in the next few years. So tremendous growth, good valuation, a lot of profit margins. This is what I'm looking for. And even if I'm wrong a little bit, that's fine. It's not gonna collapse or anything or bankrupt because those companies are running very well.
So that actually brings me to my next questions, because, obviously everyone, experience setbacks. So, you have some hard day, you have the market is moving a bit. So how do you manage, your emotions with that? And, obviously emotion, it's a big deal in investment, like, not to go out when it's down and then miss, the big up after, or just, how do you manage your emotions? And if you can tell me maybe an example, let's say, what is your biggest, something that you look back to and you say, oh, I'm proud of myself that I didn't, I'm proud of this specific investment. And what is your biggest regret? Like from both sides, basically.
Right. So setbacks is part of the of investment, and honestly, volatility for me it's not a bad thing. I see it as an opportunity, especially you're asking about the emotions. So I think emotions it's come with time. As long as you invest more and you see more, like everything in life, you get to know better yourself in these situations. So it's obviously it's a matter of time. Like 12 years in investment give you some experience, but also it's about the companies that I'm investing in. So I'm not investing in companies that are even close to get bankrupt or anything like this. So, and it's not a rumor. I read, you need to listen to earning calls, you need to read the financials, the reports, the presentations. You need to learn every day about the industry and see if things are changing. So this what keeps me cool. Obviously, there are times where you are
Yeah.
a bit worried, but if the company, for example, is selling for, I don't know, $50 and a year ago they were selling for 100, but the fundamental didn't change, I don't need, I'll probably use this volatility just to buy more of those shares and dollar average myself. And yeah,
And this
so
is like I'm sorry for just bringing it back. Just like, what is your, obviously, as you said, what is the biggest regret and what is the biggest, win? I would call it like that. As I said previously, it's not an investment advice, but we all love to hear this kind of story.
I can tell you that the company that I see the brightest, and it's not an advice obviously, but the brightest future for the next decade is, maybe you don't see it now, but I think Petrobras is going to do very well in the next decade.
We're not really allowed to say this kind of thing, but I understand.
This is what I mean. It's also the biggest, this is the biggest investment that I have currently. But oil and gas is pretty good. I think the setting is there. I don't think that we even touch the surface in terms of like the supply and demand for metallurgical coal as well, which we use to produce steel. And my biggest setback, well, when I was investing, I think it was 2013 or something like this, I was looking mainly on companies that are net, which basically mean, in this case, it was a company that had more cash than liabilities.
Uh-huh.
But there was a story there with the owners. They basically hide some of the assets, and I didn't pay too much attention to it. I thought I found something very cheap, and obviously very regret about these investments, because then there was investigations about it, and it was just a setback for the funds, and I could use it much better way. I didn't lose anything, I didn't gain anything from it, but it was just a great lesson actually to invest in companies and not necessarily in cheap companies. But you learn those lessons as well. It's part of
I think it's an important sentence, not necessarily in cheap companies. So actually, this brings me to the question of like, how do you manage, how do you approach risk management? So obviously your profile from outside, like, outsider just looks a bit consolidated. So I would love if you can explain to me, maybe, if I don't really understand if it is to just like explain to me a little bit, how do you approach risk management to all of us?
So it's always start with knowing the business that you are invested in. It's always this is the main point. And then you need to stay calm and just see what's going on. If there is a fundamental change for the worse, then maybe you need to change something, But it's if things are stay the same, or sometimes even things are getting better and companies' share price going down, the value is there. The price might go down, but the value of the company, of the assets, are actually in the real world is higher. Then you can take it to your advantage, and this is what I'm trying to do. And and concentration, again, it's not necessarily for me. It's actually good because I know what I'm doing, and I really know those companies. And again, concentration, when we're talking about it, I think we touched it before. It's not in the same geographies and not in the same industry. So we have, for example, oil and coal, which is metallurgical coal and thermal coal in the portfolio, and some financials companies. So it's good diversification, and I'm happy with this.
So basically, you're saying the biggest thing is to actually know the companies you're investing in, that the fundamentals, really understand it deeply. And also, you're kind of explaining me that as an outside investor, I don't really understand this specific, sectors, but you do have diversification even within the portfolio that you have. Yes. Within the commodities, you have diversification within countries, etc. And you have some finance as well, as you mentioned. But yes. So it's interesting.
In the commodity, like in the portfolio, there is oil, there is sand, sand. If you are doing fracking in the Permian in Texas, you need sand. It's a mission critical mineral for the fracking industry. And there is coal, metallurgical coal, thermal coal. There is financials, some of them investments, some of them now. Wise also added Wise lately, which I see great future for them. Actually, so yeah.
Okay. So interesting. So I would love if you can give just any message or advice, as I said, obviously not financial advice, but, with the, investors watching us today, if you can tell them anything that you think they should, any message to give them.
I think the main message will be obviously start early. Just for the you start early, it's good. Like you can compound and it's great, but also be patient. It's not financial advice, but I don't advocate any day trading. I think the fees are high, the taxes are high, your emotion, the emotion, it's too much for most of the people, maybe, but it's hard. So be patient, invest and be patient, and then know that you set expectations. So you won't be right all the time, and sometimes you will be wrong, and it's fine. You learn from it for the future, and just make sure that you keep learning. Just keep learning all the time. Keep learning if it's interesting to you, and I don't think that anyone can do this job, be a good investor and outperform the market if they don't really like it. Like for me, it's like finding a treasure, 10,000 companies, just find those 2-3 companies.
Touring around a little bit.
Like more than finding a treasure, Nobody see it and you can see it. Sometimes you're wrong, obviously, but
some of us just like to follow people like you. That's interesting.
Fair enough, but if you want to do it on your own, you need to like it. So
interesting. So I think it's a pretty important message also to manage, emotions, to be patient, etc., especially in long-term investments. So thank you very much, everyone, for attending this webinar. We would love to see you in our next webinar as well. Amit would love to answer all of your questions in his profile on eToro. Feel free to just, ask any question you feel on his recent posts. He would love to answer. Apologies for not answering all of the questions. We didn't have time for that, but he would love to also answer in his page. Thank you for participating and goodbye. Have a great day. Amit, it was great meeting you again.
You too. Bye, guys. Thank you.
Thank you very much. Bye-bye.